Snowflake stock just exploded after earnings, jumping more than 35% in extended trading. For a while, Snowflake was treated like just another software stock. Even worse, it was placed in the same category as software companies that could be disrupted by artificial intelligence. But I think Snowflake is different. Instead of being hurt by AI, Snowflake may actually become one of the companies that benefits from it the most. In this video, I want to break down what happened, why the stock moved so aggressively, and why I am bullish on Snowflake after this report. Let us start with the numbers. Snowflake reported revenue of $1.39 billion, up 34% year-over-year. Adjusted earnings per share came in at 39 cents. Product revenue, which is the key metric for Snowflake, came in at around $1.33 billion, also up 34% year-over-year. That matters because Snowflake is a consumption-based business. Customers use the platform for data storage, processing, analytics, applications, and now, increasingly, AI workloads. The more activity that happens on Snowflake, the more revenue the company can generate. So the most important detail was not just that product revenue grew, it was that product revenue growth accelerated. Last quarter, product revenue growth was 30%. This quarter, it accelerated to 34%. Snowflake also reported a net revenue retention rate of 126%, which means existing customers are still expanding their spending on the platform. The customer numbers were strong too. Snowflake ended the quarter with 13,912 customers and added 616 net new customers. The company also now has 64 customers spending more than $10 million over a trailing 12-month period. To me, that shows large enterprises are not walking away from Snowflake. They are expanding their usage. But the biggest reason the stock reacted so strongly was guidance. Snowflake raised its full-year product revenue outlook to $5.84 billion, representing 31% year-over-year growth. Previously, the company had guided for $5.66 billion. That guidance raise is one of the main reasons I am bullish. A strong quarter is good, but a stronger full-year outlook tells investors that management is seeing better demand ahead. And the reason demand is improving is where the Snowflake story gets interesting. AI is becoming a real driver of the business. Over the last year, many investors have worried that AI could hurt software companies. The fear is that AI could reduce the value of traditional software, pressure margins, and shift more spending toward AI labs or cloud providers. For some companies, that risk may be real. But Snowflake is not just a normal software application. Snowflake sits at the data layer, and AI needs data. Enterprise AI needs clean data, secure data, governed data, and data that businesses can actually trust. If companies want to build AI agents, automate workflows, run analytics, and use large language models inside their business, they need a reliable data foundation. That is exactly where Snowflake is positioned. This is why I think the market misunderstood the stock. Snowflake was treated like a company that AI could hurt, but this quarter showed that AI may actually increase demand for its platform. Management said AI is helping Snowflake in two major ways. First, AI is accelerating consumption on the core data platform. Companies are moving more data into Snowflake because they want to prepare for AI use cases. Second, Snowflake's own AI products are gaining traction. The two most important products are Snowflake Intelligence and Cortex Code, also called CoCo. Snowflake Intelligence is built for business users. It allows people to ask questions, get answers, and take action using company data through a natural language interface. Cortex Code is focused on developers and builders. It helps create applications, pipelines, agents, and workflows directly inside Snowflake. The adoption numbers were impressive. Accounts using Snowflake Intelligence more than doubled quarter over quarter. CoCo is already being used by more than 7,100 accounts. And CFO Brian Robbins said CoCo was the largest driver of the increase in Snowflake's forecast. That is one of the most important details from the entire earnings call. It shows that AI is already affecting the business outlook. This is not only a future story anymore. Snowflake's AI products are starting to matter financially today. That is why investors reacted so aggressively. They were not only reacting to an earnings beat, they were reacting to a change in the Snowflake story. Before this report, Snowflake looked like a slowing cloud software company. After this report, Snowflake looks more like a potential AI infrastructure platform. Snowflake wants to become what management calls the agentic control plane for the enterprise. In simple terms, that means Snowflake wants to be the platform where company data, AI models, applications, workflows, security, and permissions all come together. This matters because large enterprises cannot let AI operate in a messy or uncontrolled way. They need governance, security, auditability, and control over what data AI can access and what actions AI agents can take. Snowflake already has a strong position in enterprise data. So if companies trust Snowflake with their most valuable data, it makes sense that Snowflake could become one of the key platforms they use to make AI useful in the real world. That is the bull case. Snowflake does not need to replace OpenAI, Anthropic, or the major cloud providers. It can sit in the middle of the enterprise AI stack, connecting data, models, applications, and workflows. That could be an extremely valuable position. The AWS agreement also supports this story. Snowflake announced a new 5-year, $6 billion agreement with Amazon Web Services. Management said this agreement more than doubled the previous AWS contract and will help support enterprise AI adoption. That matters because AI workloads require a lot of compute power. As Snowflake's AI usage grows, the company needs strong infrastructure partnerships. The AWS deal also helps address margins. AI products can be expensive to run because they involve compute costs, model usage, and token usage. Management acknowledged that AI products have lower gross margins than Snowflake's core platform. But Snowflake maintained its full-year non-GAAP product gross margin guidance of 75%. The company also raised its full-year non-GAAP operating margin guidance from 12.5% to 13.5%. That is important because investors do not only want AI growth, they want profitable AI growth. Snowflake still needs to prove this over time, but this quarter showed a good combination of growth, AI adoption, and margin discipline. The balance sheet also looks strong. Snowflake ended the quarter with $4.4 billion in cash, cash equivalents, and investments, and repurchased around $300 million of stock during the quarter. So when I look at the full picture, I see accelerating product revenue growth, stronger guidance, expanding enterprise customers, fast AI adoption, margin discipline, and a strong balance sheet. That is why I think Snowflake is a buy. Of course, this is not a risk-free investment. After a move of more than 35%, expectations are much higher. Snowflake now has to keep delivering strong results to justify the move. There is also sustainability risk. One strong quarter does not prove that AI revenue will keep accelerating forever. Investors need to see continued adoption of Cocoa, Snowflake Intelligence, and other AI products over the next several quarters. Margins are another thing to watch. AI products can be lower margin than Snowflake's core platform, so the company needs to manage costs carefully as usage scales. And competition is intense. Snowflake competes with cloud providers, Databricks, and other data infrastructure companies. Everyone wants to own the enterprise AI data layer. So yes, there are real risks. But for me, the reward looks attractive because I think the market had the wrong view of Snowflake. Snowflake is not being replaced by AI. It could become one of the key platforms that helps enterprises actually use AI in the real world. This quarter changed the conversation. Snowflake went from being viewed as a struggling software growth stock to being viewed as a potential AI infrastructure winner. And I think that shift is still early. If Snowflake can continue proving that AI drives more consumption, more customer expansion, and more enterprise adoption, then the stock could have more upside over time. So my takeaway is simple. I think Snowflake was misunderstood. I think the market put it in the wrong AI category. And I think this quarter showed that Snowflake may be a beneficiary of AI, not a victim of it. That is why I am bullish on the stock. And that is why I think Snowflake is a buy. As always, this is just my opinion and not financial advice. Do your own research, understand the risks, and remember that after a move this big, the stock can be very volatile. But in my view, Snowflake just delivered the kind of quarter that can change the entire investment story. Thanks for watching. If you found this breakdown helpful, make sure to like the video, subscribe for more stock market analysis, and let me know in the comments whether you think Snowflake is becoming a real AI infrastructure winner, or if the market is getting too excited too fast.